Hi, everyone. Let's have a good week. Starting off from High Shepherd. Yes, it is a nice day, Shepherd. Hello, Kay, Shahab, everyone. So, from your longs from last week in gold, if you're long, talked about it down here last week. We had this here, and we had this breakout late in the week, right around here, the 1735 level. You could protect longs now with closes back under 1734. Everyone get it? And also, you could be taking partial profits. This formation measures to about 1810. If you just take this low, call it round numbers, $70 here. It's a little over 70. And this is a continuation move with the breakout here. Tack on 70 from 1736, and you get 1806. Which also lines up with a 3 drive to a top formation. I know this looks busy, but here's a 1, here's a 2, and the 3's coming in 1790-ish. Okay, so that's gold. I know a lot of people and the gold silver ratio is kind of moving sideways lately, but just a visual on it. Here's gold. Way surpassed these highs right here, right? And here's silver. Still hasn't taken out this high or this high, and gold has. So on a percentage basis, it's way outperforming today, but chart wise has not taken out highs that gold has. All right, so part of this is, and what's pretty important here is what happens on this dollar index. I think it's real important for risk, and I think part of the reason why we're getting a pop in the S&P after that, sneaky 30-40 handle peel off on Friday is the dollar coming off. Okay, so the market's still working with weaker dollar risk on. Euro's up, pounds up, Aussie up, S&P's up. And the dollar right here, this is going to really be an important level. I know some people are saying this low right here, which is about 98.23. So what I'm expecting here is some type of pullback off this little over 200 point advance. Maybe we pull back 100 or so. But should we start closing back over this breakdown, I think the odds increase for a move to, over 100, and then over 100, we could really have one heck of a short squeeze. Just put it here. Right? Really, it's going to be just above 98, but going to have a pretty good short squeeze over that. Sinatra, we're doing pretty good. I'm actually, that's my bias here, and that's what I think is going to eventually give us our correction in equities. And Friday, it looked like it happened in the S&Ps, but there was some unfinished business in NASDAQ. Last week, NASDAQ's high right here. I'll go to a 4-hour. This high right here, which was, I believe, Friday before we came off, did not take out this high. This high is 10,157, and the high here was 10,125. So do you think there's a couple of buy stops above here? So I'm going to be keying off this, looking for new highs. We won't, I don't think, get an RSI reading on the 4-hour over 70 at new highs, and use this for kind of a timing tool for probably buying the dollar after the stellar pullback once NASDAQ makes a new high. And what would be pretty interesting is if NASDAQ made a new high, took out last week's high, and maybe the S&Ps don't. So if the S&P is due, the spot I was looking for last week before this happened Friday, I thought we'd rally into Monday, Tuesday with all the astro stuff, you know, the new moon, the solstice, the eclipse. Thought that we'd have follow through into early next week, but you know, then we could still trade 3180 and you could be protecting yourself with stops over 220. So that's something I'm going to be looking for as well this week. But king off NASDAQ, cheerleading for one more new high in the NASDAQ. I think that's about all I was going to cover. But the key is here, this dollar index. Maybe look for a 61.8% retrace, maybe back down to, this was a little over 200. So maybe we get 120, be like, you know, around 96.5 or so. That should provide enough cover for risk on to stay intact until NASDAQ squeezes the last short over the highs from a few weeks ago. And those are my calls. The next one's yours. 800, blah, 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 blah. And thank you, Brock. Glad to serve. Gold's coming off. And I'm going to turn it over to my associate, my boss, Blake Morrow.
Your trading warrior brother.
Huh?
Your trading warrior brother.
Oh, yeah, but yeah, he's that too. You are too.
Of course.
You like being my trading warrior brother, don't you? You feel tough, don't you? Being a warrior.
Blake, sorry, I wasn't paying much attention because Blake says that he can't hear you because obviously something is wrong with his audio.
Oh, okay.
Okay, so he's.
No, it's working. It's working now.
Okay.
Really, yeah, it's really weird. I'm sitting here. I know I had the webinar started and I was actually reading an article and I'm like, why am I not hearing Dale's voice right now? And then I did a pantomime.
I did a pantomime on the markets, Blake.
What's that?
I did a pantomime. I just moved my cursor around.
Oh, did you? No, I seriously, I was just reading this article. I was just in the middle of reading it and I'm like, huh. Why don't I hear?
I didn't want to disturb you, your concentration.
I guess that's what it was.
So anyway, good to have you back.
Just so you know, I haven't heard one thing that you've said. So
okay,
until just a moment ago.
All right.
So were you calling on me? Were you?
Yeah.
Oh, yeah, you were. Yeah. Okay. All right. I had no idea. How are you doing?
Good, buddy. Okay. You know,
kind of a slow day. The market. I mean, risk kind of gapped down, and then we bounced since the open, and then that's kind of my thought process when we were in. I was doing the week ahead video. Is like, okay, well, you know, there's not a whole lot of. I didn't think there was. I thought it was going to be a range bound week. Was pretty much my take on the market, and you know, we've seen the dollar pull back a little bit, and it makes sense to me. So it's not anything that seems too odd at this moment. Just still keeping an eye on all the majors. One of the things that I was looking at a little bit earlier regarding the precious metals, and I'm not sure if you looked at them because again, I didn't hear exactly what you said or what you were talking about. Is silver's up against its triangle resistance. I feel it's right up against resistance here. Gold is at the upper end of its range. I don't know if I'd really want to be long precious metals at this moment. You know what I mean?
Yeah. Not if we are back under that 1736 level in gold, Blake. I mean, if you're long, that's where I'd be trailing the stop now.
Yeah. I mean, we talked about last week about being on the long side of gold, and I wouldn't want to be short. But now that we're up at the upper end of this range, I wouldn't want to establish new long positions right now. It doesn't make any sense, especially when you got again. I'll reiterate here. You got silver up against, the triangle resistance, or this could be a, pennant, but you're up against resistance. So unless you're breaking out above 18, you got to be a little cautious being on the long side of these, right?
Yeah. I still think there's more left, but you always feel like the market, the trade could come back on you, and
Well,
what I do. But someone gave me a great tip, and that is when you're looking at a trade and say you're long and you're getting ready to liquidate, ask yourself if you would reverse there.
yeah, that's the for me, if I'm already long something, and I'm not sure if this is exactly what you said, but because I need to turn the volume up just a hair. Like for me, if I'm gonna add to a position,
Yeah.
I have to ask myself, would I be taking that trade right now?
If you were flat.
If I was flat, yeah, exactly. Yeah. It's the only way.
And if you're in a position and you're ready to get out because it's a nice profit, that's your reason. And if you ask yourself the question, would I also reverse here? And the answer is no. Then you put your trailing stop in and walk away. And I think I've tried that a few times. It served me, because normally I'll just ring the register.
Yeah, that makes a lot of sense, and I think that's a great process to go through personally. So, and that's some great coaching there, Coach. So, looking at silver, I mean, again, this is one of those situations where I don't know if I'd want to be long necessarily here, but what I would wait for is a dip back down towards 17 to be on the long side. And again, and if it breaks out, then you you have to chase it higher. If it breaks above 18, you just know this is the breakout point. And like you treat it like this, breaks out, then you buy the dip. Hopefully, there's a dip, and then you can play the move as it comes out of the triangle. But yeah, anyway. I was just looking at these precious metals up here, and then like the euro I discussed on the week ahead video. We're in this wedge. I've actually had orders to buy the euro dollar down here at the 111.50s since a week and a half ago, maybe 2 weeks ago. Still trying to wait for a dip to buy it, but just hasn't really transpired as of yet. But if you look at you look at the S&P, and the S&P has had a pretty aggressive bounce off of the lows overnight. And I can't put my finger on any specific reason why, other than the market is programmed to buy dips. You're right. There's no like reasoning that the market should be, should have bounced the way that they have. But they have. They've continued to bounce overnight. But again, I can't put my finger on any specific reason why it is. I still think that the markets are in a consolidation phase, so we're probably going to be doing something that looks similar to this all week, I would think. As we head into the end of the quarter. Because this is the end of the quarter that we're coming up to next Tuesday. So you got to just keep that in mind as I would assume that the market is going to stay fairly propped up going into the end of this quarter. We shouldn't see significant selling. You're going to have funds that need to participate. They need to be involved in the markets that are running behind the S&P, the NASDAQ, and all the other indices for gains. So they're going to have to show on their books that they are invested. So I don't think you're going to see any significant selling for the next week and a half. Now after the quarter's over, you're probably going to see. That's when I think the selling's gonna take place. So anyway, just some food for thought there. And, you know, looking at the S&P again, I just think we're in a more of a consolidation. I think if we get back to, let's just say 3140, somewhere up here, you know, this neighborhood, this is probably going to be an area to be on the sell side. And then if you dip back down, you know, towards the 3000 level in the S&P, that's going to be where you want to be on the long side, something like that. Let's take a look at some of these major currencies. We looked at the euro, the cable, you know, completed this AB equals CD, which we talked about on the week ahead video, that we'd find some support down here by the 618. We did, and we are bouncing. I would think that the cable will stall somewhere around here. So any type of rally that you have in the cable towards 124.50 is probably going to find some sellers. So if you take the high there to the low, you know, that's going to be a 38% retracement. So the way I'd play the cable is any bounce back to 124, was that 124.70? You probably want to be on the, you know, just expect that the bounce is going to lose some steam up there. Aussie
Queen with us today.
Oh yeah, that's right. You do have Lydia up here. So again, you know, I'm not expecting any fireworks out of the cable. I've been expecting a bounce after this pattern completion, but yeah, Lydia will be joining Dale and the team today. So you guys are, you know,
she did a great job at the summit.
She did at the Trader Summit. She did, and especially if you were a newer trader, like, you know, like just a newer, trying to learn, you know, some of the basics. She did a really great job. So, just gonna drink my coffee. Okay, so let's take a look at the Aussie. You know, the Aussie was trying to break down, and then, you know, we kept down over the weekend. Of course, this is typical. Catch everybody short down here. We're bouncing back. You know, let me see here. This trend line, I guess if you extend it out a little bit, we're probably nudging up against it. I don't know. I'm not sure what to do with the Aussie here. It seems very, very choppy. And, you know, the Kiwi is really strong today. Let me delete some of this stuff. Kiwi's up near its highs in the session. You can see we're strengthening here. Broke out of this wedge. We tested the wedge bottom, and then we're breaking higher. So that's a little bit of risk on right there. Dollar Canadian. That should lead to dollar Canadian weakness, is you see the Aussie and the Kiwi firming up, but yeah, this Canadian looks pretty sideways right now. Doesn't look inviting as we're in this descending channel. So in order to be bullish, you have to get above this 137 level. By the time it, you know, if it does rally, you have to get all the way back up to 137 before it becomes bullish. Nothing really to do there. The dollar Mexican peso is holding up pretty well, considering the rally, or the rally back that we've seen in risk. The dollar Mexican peso hasn't pulled back a whole lot, which I think we've got to, you know, be aware of that, because just like last week, you know, the dollar Mexican peso really kind of showed us that the markets would be under pressure, because it just didn't back off, and maybe that's the case this week as well. I would just watch the dollar Mexican peso if we start making higher highs, which we're not right now, but, you know, on more of an intraday basis, you know, that means we'd have to break back above 23 or close to 23. But you know, you notice here just on the 4-hour chart, we are making higher lows. So maybe a dip back down to 1 or 22.30, 22.35, somewhere down here might offer a better level to be on the long side. Swissy's not doing a whole lot. US dollar Norwegian krona is not doing a whole lot. And I guess the dollar yen, we could take a real quick look at it. This is something that I did mention on the week ahead video. And something that I am paying pretty close attention to is if the dollar yen breaks back below 106.50. We start breaking below this little area. That would concern me. I'd be more concerned about like risk aversion seeping back into the market. So, and again, you can look at what's happened overnight in the S&P and go, well, the S&P is almost up 1%. Nasdaq's up 1%, and the dollar yen's barely bounced. We've gone from 106.70 to 106.90. So we haven't bounced that much. So in the event that we start taking out these lows, that would signal to me that equities are probably going to be coming back under pressure. Nothing to think about right at this moment, but the underperformance of the dollar yen versus what's happening in the S&P is worth noting at this stage in the game. And that's pretty much it. And I don't want to start going into a lot of the cross rates because I don't want to take away from what Steve will be looking at a little bit later. But speaking of Steve and Stelios, good morning, gentlemen. How are you?
Good morning. Everybody's
Good morning.
good.
Yeah, how's it going over there in Athens?
All good. Very nice.
It couldn't be hotter here. And by the way, for Father's Day, I didn't want to do this, but my neighbor is like, he wanted and by the way, this is like one of those, we're close with our neighbors because their behaviors, we understand what they've been doing and the precautions they've been taking the last couple months. So we hang out with them throughout the last month or two, through this pandemic. And they're supposed to be traveling to go visit some family, and ironically, the state where her mom is at might not let people from Arizona, where I'm at, travel there because of how bad COVID is, which is crazy, right? So,
Yeah.
So, he had wanted to get away from his Father's Day, and he's got a little bit. His kids are a little bit younger, and he's like, I want to go play golf. Do you want to go play? And I'm like, it's going to be like 110 degrees. He's like, I don't care. So we went out at noon, at the hottest time of the day, and played golf yesterday. I'm surprised I didn't get sun poisoning. It was very hot. It was I don't particularly enjoy doing that, but I was doing it more as a favor so he could get out of town or get out of his house. So yeah. Playing golf in 110 degree weather was not my idea of a wonderful Father's Day, but I still had fun. So yeah, it's all right.
Sounds good.
How about you guys? Do you guys celebrate Father's Day in Athens?
Yeah, we do. Yeah.
Is it yesterday or is it a different day?
It was yesterday. Yeah.
Okay, so you guys do celebrate Father's Day in Greece.
Yeah, I mean, as
every
with
day is Father's Day in Greece, right, Stel?
I was going to say the opposite. Every day is Women's Day. And,
Yeah, that's very
right.
good.
Every day is Mother's Day, other than
In California.
One way or the other.
yesterday. Yes, that
Women
makes
are
sense.
ruling the planet now.
So did your families do anything special for you guys?
Nope. No, we're just here at home. They let me pick. They let me pick what to watch on Netflix. That was my present.
Oh, there you go.
Yeah.
They let him go to the toilet as many times as he wanted. That
Nice.
was his, that
Well,
was his present.
it's been it's been kind of a quiet overnight session, and it like risk has just drifted higher.
Of
And
course it
as I
did.
was saying a little bit earlier, I don't know if you guys agree. I just don't think that over the next week and a half, as the quarter wraps up, you're going to see any you're not going to see any significant selling come into the market because you're going to have buyers on dips every dip, right?
At least that's how it looks like, and unless we get, something that's like unexpected, you know what I mean?
Yeah, I mean, maybe there's something, but the one thing that I have to point out is that because we've had such an aggressive bounce in equities, it's hard to see that stop at the end of a quarter, because you have to have institutions that mark up their books going into
window
the
dressing.
quarter. They have to.
Half year end as well, right? It's not just quarter end.
Yeah.
What's that?
It's half year end
Yeah.
and quarter at the same time. So nice window dressing for during the next few days.
Yeah, so you're not going to see any type of pullback that you see in equity should have, even if if stocks drift lower like by 2% from here throughout the course of the week, you're going to find buyers, I think. So anyway, just some food for thought for people out there.
2% lower, they're going to put you in prison for saying words like that.
Right, I would assume so. Well, hopefully we can find some interesting setups today, and I'm sure you've got some things that you'd like to cover. So I'm going to pass it over to you guys. And Dale, have a great interview with Lydia today. And
Thanks, Blake.
Steve and Stelios, happy Father's Day.
Thank you, mate.
To you guys. All right.
Thanks,
Same to you.
All right. See you guys.
Bye-bye, mate.
Blake.
Hey, Dale, how you doing?
Good. Yeah, I was thinking about what you were saying to the kids, it says in the Bible, someone told me, I can't, verify it, but that your parents teach you about unconditional love and your children teach you about conditional love.
Yeah, that's
What
a
do
good
you
point,
think?
actually.
Huh?
Yeah.
Isn't that something?
Yeah.
It's always a trade-off with kids, isn't it?
Yeah. It's
do
conditional.
Do this, otherwise this happens, or do this and you get this as a reward,
Yeah, so right. You gotta always be cutting deals with them, right?
Yeah, exactly.
That's conditional, right? All right. Anyway, that's my homily for today. Go ahead, guys.
All right. So, Joe
So
says, my kids teach me patience. Yeah, Joe, I agree.
Oh, that's the only standard all kids, do.
Yeah.
They teach us patience. Yeah, quite a lot of it, actually.
So it's been a quite morning, although, risk was sold quite aggressively on the open, Asian trading due to the developments over the weekend, more cases of COVID. I think I read somewhere double-digit gains in cases or something like that, which is extraordinary. And in Germany, this coefficient, the R coefficient, which shows how many people each infected person infects. Yeah,
yes.
It had gone down to like 1.1 or 1 or something like that, and now it's back near 2 in Germany. So that's very scary. I mean, I'll go and get the numbers exactly, but I remember that what I saw was a big increase. So that scares me. And clearly the market doesn't care, or at least equities don't care. Like you guys correctly said, quarter end, half year end, shorts are going to get burned again. It's almost a given, but eventually we will see a leg lower. But the question is, how much higher do we go first? We had very little things. We had actually, interestingly, we had some news out of the Bank of England, where the governor, Andrew Bailey, wrote a piece on Bloomberg, and he said, the market actually reacted to this initially. He said that they will need to reduce the balance sheet before hiking rates. And straight away, the market said, I saw comments on Twitter and everywhere, oh my God, this is really bullish, the pound gained a little bit, then he gave it all back. Because the question is, yes, he says it will be, they would need to reduce the balance sheet before hiking. First of all, reduce by how much? And secondly, I find the need to own 3 Ferraris. I don't have them. It doesn't mean it's going to happen because they say it. So, I'm not. It's very difficult to believe these guys. They say all sorts of things. Bernanke said that quantitative easing and is not monetization. It's a temporary
they would unwind
thing.
it, yes. After the emergency was over. By the way, speaking of which, that's a good segue. Did you listen to what Powell said in an equivalent question last week when he was testifying in Congress, when they
No.
asked him, what's going to happen with the balance sheet and, what they intend to do about it.
No, what did he
So
say?
now he officially, in essence, admitted that the balance sheet is not going to shrink away, because his answer more or less was something in the sense that, when the emergency is over, we're going to stop expanding the balance sheet. And given the fact that the economy is going to keep growing, the Fed's balance sheet as a percentage of the economy is going to keep
go
shrinking.
Lower. Yeah, as a percentage. Nice one.
Yeah. So in essence, I mean, that was more or less an open admission that they're not even going to attempt to shrink the balance sheet ever again.
Incredible.
So it's a one-way street, either moving higher or having some periods that, the expansion just pauses.
Incredible. I mean, we all saw what happens when they tried to taper last time, 2 or 3 years ago, whenever it was. It was very short, and it was met by some pretty decent market reaction. So I think they know that, and I think that if they try to taper again, there's going to be a similar reaction. So, priority is the stock market. They're not saying it, but it clearly is. So I'm sure they're going to do everything they can to keep it afloat.
Yeah, of course, absolutely. So they're not going to be trying to do that quote unquote mistake again.
Yeah. So what do I think going forward? Nothing's changed in my view over the past few days. I'm just reading here, Simon. Yeah, I read that there was apparently an abattoir in Germany, where they kill the animals for consumption, and more than 1,000 workers tested positive there. I mean, first of all, question one: how many people work there? I mean, how big is that? But anyway, second of all,
I'm pretty sure no matter how many people work there, 1,000 people are probably still, a good percentage of those,
yeah,
right?
Yeah. So you're hearing all these cases, and in many countries, in Brazil, the rates are phenomenal. The rate of infections and deaths, unfortunately. So
I think that whoever has eyes is seeing the obvious failure. They won't openly admit it, with the exception of the very few that at least were honest to say it since the beginning. Sweden, for example. Now, even the rest are more or less on the same page. They just won't openly admit it because, it's an issue that creates a lot of polarization. I mean, they saw the huge damage to the economy, and they've decided that they're going to move in the route of herd immunity. Now, they're not going to admit it, but I mean, from what you're seeing, do you have any doubt that that's the policy now in the US? And not only in the US. I mean, it's the vast majority of the countries are now more or less in a silent acceptance that, they're not going to close the economy again.
Yeah, it looks like it. It looks
Yeah.
like it. I mean, yeah, I don't know what they're going to do, but it definitely looks like it. So for me, it's very worrying in terms of the effects. I'm not saying long term, years from now. I'm just saying the next 12 to 18 months. I think it's going to be very difficult. So that's why I'm still a little bit pessimistic on how things are going to go. I hope I'm wrong again, but that's the way it looks to me. And apart from that, very, very little else to say, actually.
As Blake said, it is likely that we're going to have, a few more days until the quarter and the half year is over. That it's not going to be easy to see a lot of volatility. So it is a decent likelihood.
Yeah. I think one thing that is coming back to focus, and you talked about this Friday, is the U.S. elections and how Biden is now ahead of Trump, and Trump's gathering over the weekend. Did you read about that?
Yeah, I did see that it was underwhelming. He didn't even fill the stadium, right?
Apparently, some group of people on TikTok or whatever it's called fooled the organizers into believing that people are going to be there, and they're like, many of them didn't attend. But anyway, I think the main issue is how likely is it going to be that Biden and Trump are going to be neck and neck, or Biden is going to be ahead going into November, like, September.
One
October.
thing is for sure from what we're seeing so far, somebody believing that Trump is going to get re-elected in a landslide seems foolish.
Yeah.
So given the fact that I think that the vast majority of people can accept that, at least we can admit that it doesn't look like Trump can expect to be re-elected in a landslide. Now, the fact that the market hasn't yet started repricing the path forward of company forward earnings is something that you need to keep in mind, because, and that's not a political position. I mean, just by what the Democrats have been saying again and again, they were against the corporate tax cuts, and they want to impose higher taxes to corporations and rich people, both of which will definitely lead to reduced earnings. And since one of the highest correlations between stock prices and is forward earnings, if we even accept that there is a decent possibility of Biden getting elected, the market is going to have to price that in stock prices. So the more the days pass, and at the very least it looks like it's going to be a close call or whatever, I think that at some point the market is going to have to reprice that, and as it frequently happens lately, it might have to do that in a violent manner if it keeps ignoring it for somewhat longer.
Yeah, I agree. I think we have eliminated the huge risks to equities in the form of Liz Warren and Bernie Sanders, but still, I think Biden, the market will not like Biden being elected. That's for sure.
I'm not even sure if that's the case, Telio, because I said the other day as well, Sanders once again did not get the nomination, but his policies more or less have gained a lot of traction, and I would say, having to do with economic policies, now I'm talking about purely, not only among Democrats, but do you see many left in the Republican Party that are like fiscally conservative, frugal, or whatever? Because it looks like the vast majority of senators and House Representatives are like really believe that you can just create money out of thin air, without the need of actually producing stuff. So
why not? It's been working so well over the past decade.
Yeah. So until this illusion, finds the usual death of all illusions, which is reality hits you in the head sooner rather than later. I see more or less these policies being the winner, no matter who, if actually Biden is going to be the one that's going to be president, or even Trump, because I mean, Trump as a nominee, as a contender the previous time, if you remember, he was saying that he would reduce the deficits, and we have the exact opposite. I mean, as the trend was with his predecessors, especially from Bush and afterwards, the deficits and the debt path forward are getting more parabolic by the year. So not only he didn't reverse that, but he kept on the parabolic path of the debt moving higher.
Yeah. Yes. Well,
they are. Biden is going to repeal at least part of the Trump tax cut. That's not.
They've said, at least they've said that many times now. As I was writing in the chat room, if there is one thing I trust politicians 100% about, is that they're not trustworthy. So, who knows? But it looks very likely, because, that's what they've been saying. I mean, that, they're going to repel many of these tax cuts, and in fact, they want to increase taxes. Right. Personally, I'm more of a libertarian. I'm all against cutting taxes, but at the same time, if you want to cut taxes, you have to cut spending. End of story. I mean, you can't have both at the same time. You can't be cutting taxes and increasing government spending at the same time, but simply because the maths don't add
Well,
up.
you could. We've been doing it for quite some time.
Yeah, but the day of reckoning is going to be coming because of that. I mean, it's inevitable. Now,
When?
when is a big question, but it's not about if, it's a given. It's about when. So as we said, it's the game of musical chairs. So the only game in town is make sure that you're not in the game when the music stops. So, pass the hand grenade to the next generation, meaning to the next president, to the next central banker, et cetera, and hope that it doesn't explode in your hands.
Yeah. Meanwhile, metals are doing really well today again.
Really
Meanwhile,
well.
metals, of course, and let's go to the market. Meanwhile, metals, of course, are doing well. And I have said again and again that, a lot of people are trying to fight this trend. I think that the way that metals have been moving is the perfect
Very
example.
orderly.
Is the perfect example of what we say climbing a wall of water, right, Dale?
It's been
Because
very orderly, yeah.
Yeah, because if you think about it, even gold bugs, let's call them, even people that are very bullish the metals, given the history of the metals, meaning that in periods that common logic would say that they should be moving higher, they were actually under pressure. They've been quite hesitant to embrace the rally higher with the enthusiasm that you would expect, given the circumstances. But what is a fact is that once we broke through this 1360 area, we've had some pullbacks. The vast majority of which, with the exception of this one, were extremely orderly and obviously corrective. And the only incident that we had that, a pullback was not looking like it was corrective, this one, at least it was very short-lived in time, because it took 10 days. And within 10 days, we found a high and we started rallying once again. So once again, now we see this recent consolidation, which looks like being in a triangle. Now, somebody in the text, in the chat here mentioned, or it was in the chat room, I don't remember really, that this looks like an inverted head and shoulders breaking out. Yeah, although, I've said it before, it's, head and shoulders formations are, not advised to be used as continuation formations. So I'm more prone to look at it as a triangle, but, that doesn't really change the substance of it, right? So we're breaking through another consolidation pattern, no matter if you want to look at it as an inverted head and shoulders formation or just as a triangle. And now we're opening up more upside. I mean, the spike high at 1765 is the first target. And then we start looking at extension targets of this recent pullback. 1791 is the 127% extension. And then we have a confluence of resistances at 1820 roughly, which is the 88.6% fib of from the all-time high to the low we found a few years ago, and the 161.8% extension of this little pullback. So I really see no reason why gold will stop. And if you want to have a look at silver, you want to look at it as a triangle, meaning consider this. Let me take off the magnet so I can take, meaning considering this being the trend line support, you want to look at it as a channel like this, the blue one. It doesn't really matter, because one way or another, it's another consolidation pattern. We're currently testing resistance. A daily close above 1805 opens the door for a retest of that high and previous high at $19. So, I think we're going there. And a lot of people are, every single pullback we get, like a couple of days of a little bit of a sell-off, they're like, okay, here it is. Here's the high in gold. Here's the high in silver. And now we're moving higher. This is a bubble or whatever. I mean, I've heard everything. But bottom line, I've heard it 20 times so far in this rally, and none of them have been proven right. So the path of least resistance remains higher. Keep looking higher. Same deal with crude. I mean, crude was also climbing a wall of worry. I remind you that when we started this recovery, they even launched options with a negative strike, so people can bet for a second consecutive months that crude is going to go negative. Not only didn't go negative, but we've had a massive, in percentage terms, a massive rally higher. I mean, more than tripled in price. This is the continuous, by the way. And, you know, it's still going. Now, do I believe you should be buying it here? Absolutely not. I think that this looks like a very mature rebound to me. I'm still a believer that crude is going higher, but do I believe there is any risk reward on the table here to be long as we speak? No, absolutely not. I would be more than interested in buying crude. I had actually bought in you know, a crude related company. I got rid of it last week with a profit, and I'm going to be more than happy to buy even directly crude again now that we don't have all that volatility that we had in the lows and that, you know, huge contango. But I would want to see a retest at least of the $29 area in order for me to be looking to do so. But of course, until we do see at least a breakdown from this ascending channel, you know, that doesn't mean that it can't, you know, keep crawling higher for a few more days, right? So, you know, I'm very hesitant that there is a lot more upside left in the short term, but that doesn't mean that it will immediately roll over and die. So it's more a waiting game, in my opinion. Instead of shorting it, it's a better idea to, you know, let it reverse lower, find, stabilize, hopefully, you know, at an obvious support level, and then look to buy than anything else. Now, having to do with dollar pairs, first of all, as I showed at the end of last week, you know, it is a fact, it is a given that correlations have increased substantially after, you know, what happened and all the stimulus that we got, meaning we've clearly demonstrated in various ways and various charts that even the vast majority of the FX pairs have now been, hopefully temporarily, transformed in risk on and risk off, with the dollar, of course, being the main reason for that, right? Because, you know, with the exception of the last few days that we've seen somewhat of a decoupling of that, somewhat. I mean, it's just not as strong as it was. We've seen that risk off flows immediately get the dollar bid, risk on flows immediately you see the dollar being sold off. So, you know, that immediately affects anything that's dollar denominated. Now, looking at the dollar index, which we can clearly see here, you know, from the bull side, we didn't produce a lower low. But on the other hand, so far, I have to say that I don't see anything really bullish in the way the DXY has been rebounding. So, yeah, we did find a low for the time being, and I'm monitoring this, I mean, very basic ascending channel, and so far we're holding it. So, you know, as long as we do, in the short term, you can keep looking higher. But, you know, given, as Blake said before, and I totally agree, that end of semester, semester, half year flows are probably going to be risk positive. You know, I don't know how easy it's going to be for the dollar to at least, you know, maintain its position here and, you know, not see some type of a sell-off. So, you know, I'm closely monitoring this channel, and, you know, I'll be looking to, you know, to see what's going to happen from there. Speaking of which, let's take two of the main and most liquid FX markets here, the Euro USD and the pound. Now, you have to note here that, first of all, the Euro USD has now fulfilled the minimum target I was looking for in the pullback, which is that 111.50 zone. That's both the horizontal support resistance area and the 38.2% fib of this move higher. So it's a double confluence of supports, right? So theoretically speaking, we can even reverse higher from here. I mean, it's a fine level. I mean, we can also move a little bit lower, but we, at least in my mind, we have fulfilled like my minimum target, my minimum expectations. And having to do with the pound, also a confluence of supports here, horizontal support resistance area, and the 61.8. Clearly, the pound has suffered more during the past couple of weeks, and the 61.8 of that last leg higher. So, I would be a little bit careful here as well. I mean, I also see 2 legs lower so far. Now I haven't really extended them to see if we have some type of equality as well, but we might as well do it now. There you go. Perfect equality of targets. Also, look at this. First leg lower, perfectly touched today by the market at when we were at the lows, right? At 123.28. So, I could see the argument for trying to buy the cable here, which, both a look at Euro USD being on support, the pound being on support, knowing that the combination of the two is a big percentage, a big chunk of the DXY, and seeing the way that the DXY has recovered in an orderly fashion and in a corrective manner, would make me quite a lot skeptical trying to buy the dollar here. Now, of course, the moment you see some move lower in stocks, I mean, let's assume that, some headline comes out, or like some, spike in cases that the market seems to start caring about, or some deterioration in, I don't know, whatever the market is going to start caring about. Obviously, immediately the flows are going to turn for the dollar. But until that happens, and, as I said, given the days that we have ahead of us, it is a big likelihood that it won't. So that means that you should be quite careful being long the dollar for at least a few more days. Now, speaking about dollar pairs, just have a look at the Aussie here. The move lower from the highs in the Aussie is very, very much corrective, or at least it looks like very much corrective so far. Here's the Kiwi. Same deal. I mean, both of them seem to have created pennants. At least the price action so far, because I've said many, many times that, reading corrective price action is quite tricky, because what can start very clearly looking as a correction that is a type of correction can then unfold in being some, different type of a corrective move. Now, also note the fact, look at the Kiwi, for example. The Kiwi gapped lower yesterday, and so far we have a bullish engulfing candlestick. Same deal with the Aussie. So, quite a bullish way to start the week, right? Bullish engulfing candlesticks on the daily chart in both cases. Now, of course, for them to be bullish engulfing candlesticks, there is one element missing, and it is a daily close, because who knows, by the end of the day, something might happen and, they might close as shooting stars. But, the chances are that those are going to close as bullish engulfing candlesticks, which means that these, also knowing their correlation with risk, also point in the same direction, that we might have some upside. And speaking of stocks, why don't we just go directly on a 4-hour chart in stocks? And here's the S&P. S&P move lower. That's why I said you should be careful a little bit about corrective moves, because up until yesterday night, this was looking like a nice triangle, right? Now we had that spike lower, and this forces you to change this corrective formation to a channel, right? I'm not going to say it's a flag, because it has already its duration has already extended what should be accepted as a flag, having to do with the duration of the previous move higher. So I'm not going to call it a flag for that exact reason, but still it's like a channeled correction, okay? And it is a corrective move until proven otherwise, simply because of the way we have been consolidating, in essence doing nothing for a decent period of time. Now, this type of price action, and given the fact that the prior move is clearly higher, is telling me that there is a very decent chance, and that's why I also closed my second pattern in play last week, it's telling me that it is very likely that the next move, even if it's short-lived, is going to be to the upside. So bottom line, everything on the chart at the moment, are telling me that probably we will have a few days of risk on in that's going to affect, both FX markets and obviously, the stock markets, before we can start talking about again the possibility of seeing, stocks turn lower and tank, and then you should see the dollar getting bid and FX markets reverse as well. Hello, Steve. Could you please look at the euros, please? Yes, absolutely. The euros is traditionally extremely strongly correlated with risk as well, inversely correlated. So it makes sense that we gapped higher in the case of the euros, and we've been pushing lower so far during the whole day. And look where we got rejected from this channel's trendline resistance. And I'll be more than happy to look higher in the euros as long as we manage to break through this channel. Because from a risk reward perspective, and given the fact that we've been moving lower since 20th of March, the trend favors the downside. And here is Euro Kiwi, not rejected from the channel's trendline resistance because it didn't even make it there, but still within this descending channel, also producing a bearish engulfing on the daily so far. So as long as we're trading within this channel and we don't break above it, the path of least resistance in the short term is lower. Okay. Hand and shoulder upside in go ahead. Probably you meant head and shoulders at 4 hour and at the daily. Yeah, it's what I mentioned before. I'd rather look at it as a triangle, but bottom line is the same thing. Bitcoin attempting a bullish breakout. I'm a little bit skeptical about it, about Bitcoin, and I'll tell you why. Because I'm not saying that it can't break higher. It definitely can, and we definitely know that this trend line resistance, the one you see in green, is quite important, right? From a technical perspective, it has been capping price action so far since we got that mania high up there. So as long as we stay below it, from a risk reward perspective, it looks more appealing to be in the short side. But even if you look closer, this recent price action could be viewed as an ascending wedge. So I'm not saying it can break higher. It can. But I'm saying that, as long as we stay, let's say, below 10,500, I'm quite skeptical. And from a risk reward perspective, I think you should be careful because the risk reward doesn't favor you being long. Now, Ethereum, not that much different. It's still holding this ascending channel, but on the other hand, you should be, quite careful because, the move higher is not that, strong. We're still seeing a series of lower highs. So I would remain very careful in one way or the other. Let me see what other questions we have. So what we have is a failure of more or less free markets. That's the only sure thing. So about main factory by mistakes are where the main facilities, where the point where the BOE openly admits that they stood between government and insolvency during the early days when markets panicked, but what happened again easily. What is good level to buy gold and silver? Now that's not an easy discussion to have, simply because these markets have given a lot of opportunities to buy them, but obviously the higher we go, the worse the risk reward becomes, especially given the fact that we're seeing longer term divergences. So keep that in mind. Now, somebody could be even buying gold earlier today when it was breaking through this triangle, and somebody can buy silver once it breaks through 1805, very cautiously for at least a move towards $19. So, I mean, there are still short-term opportunities to buy them. Now, I totally understand why somebody would not want to buy them after, such a huge move higher and would be looking for a rather bigger correction lower to buy them. So, mainly in order for me to answer that question, I would need to be more aware of what your time horizon is as a trader in general. I mean, what's the time frame you're looking at when you're trading? So, if you're a scalper, it's a totally different discussion than if you're the person that, is thinking of buying and holding for a couple of years. And of course, everything that's in between there, you want to trade it for a few days, you want to trade it for a few weeks. So, it depends. Dale, I see
Yes,
it's
buddy.
time for the interview. I know that we have Lydia today with us, right?
Yeah, Lydia, I'm looking for you. If you're here, will you please say something in the chat? And she's been retweeting everything, so I'd be surprised.
Yeah, I saw that as well. So and I know that Lydia
she's not here
is an excellent professional. So I can't imagine that like she forgot or whatever.
Well, we're all human.
That is true.
Even excellent professionals make mistakes. So anyway, any other questions for Steve while we?
Yeah, we do have. Okay.
I'll just let you know when I see her, buddy.
Absolutely. So you can also.
Well, here she is. See, do you see her?
Yeah, I see her. I'm going to promote her.
Okay.
I'm going to promote her to panelist and to co-host in case she wants to share.
Hey guys.
Hi, Lydia.
Hey, Lydia.
Good morning, my trading warrior sister.
I lost track of time looking at the charts.
Yeah, you know.
We've all been there, Lydia.
Yeah. Obsessed with the candle, romantic. What a romantic chart with all these candlesticks.
You
Don't you think?
understand.
All right, thank you, Steve. So Steve will stop sharing, and then we'll get
nice to see you, Lydia. I hope
there.
everything's okay there.
Steve, thank you.
There you go, Lydia. You remember the green box.
Yeah.
How's your family and everyone okay with the pandemic and staying healthy?
Everyone is doing well, thank you. Yeah.
Good. All right. So, pound's been under pressure. It's been underperforming almost everything. So, wherever you want to start, Lydia, go ahead.
Okay. So I'll start with the pound yen. I know this crowd loves the guppy. And also I'll start with just some prevailing themes fundamentally. So the pound right now, we're just seeing pound weakness right across the board. And I think the pound is trading on a couple of, I think Forex might be trading on a couple of things. And one is, which is not scientific, but it seems that the currencies with countries that are reopening well, we're seeing strength there. So in the UK is probably one of the laggards when we're looking at the major currencies. So we're seeing that kind of weakness. We're seeing strength in like Australian dollar, which is a proxy to China being open or reopening first. Also with New Zealand, with their news around eradicating the virus, we're seeing the New Zealand dollar has just has been on a tear for the last like 2-3 weeks. And particularly against the pound.
Great observation, by the way.
Yeah, thank you. And then pound's just dealing with Brexit still.
Yeah.
So when we're seeing these rallies in the pound, they've just been opportunities to sell, particularly if you caught anything last week or the week prior. So I'm looking at yen. I'm going to dial up with the yen. Yen, I saw at last week, it was coming up against resistance. And a lot of these things have been kind of resistance to support was what I've been seeing. And until we get some true trends, and that was prior to last week. Last week, I feel like we kind of established some trends. And we might see some reversals, and this is why. So pound yen, you'll see it broke the 618 last week after topping out at resistance here. I have at a 136.46. And I thought it would find, some resistance at the 618, but it broke last week. And, if you followed me for any amount of time, I think that's a signal for a reversal of the prevailing trend, which in this case was to the upside. Then we had a correction, but it continued lower, broke that 618, and it fell. And we should get to see a reversal of the prevailing trend to the upside and come back to lows. But before those lows, we have this support at 131.55, which is essentially where we opened this week, closed last week Friday, opened this week, and we've seen price find support and start to move higher. And it looks like it could be just a correction. You know, we get a bounce. Some would call it a dead cat bounce. We would get a bounce and then turn lower. But as we start to zoom out, you'll start to see that what we're really seeing, I'm just going to step you through, you all will start to see my methodology. So after this bounce, it was a correction until we got the move 2 weeks ago through up into 140, which broke the 618 to this side, which just means overall, like, we might be looking at an uptrend. So just to clean some of this up, let's move out to the weekly chart. And so now we just start to, or I'll just start to clean some of this up and remove this broken fib here and remove this one here, and then just put a fib over the entire rally from 124 to 140. And you guys, we're just in a correction to the downside. In fact,
this would be the second higher low if we hold in here.
Exactly. Okay. Or the next, or after that, the second higher high, if we're going to the upside, right? And that support has confluence with the 50% fib. And, you know, I like pound always correcting into the 50% fib. This could be just a huge opportunity to buy that takes us above 140. So of course we have some resistance level. We have 136 still to contend with, and before we get there, but this could just be a setup for longs. And so if we see risk appetite pick up, we see stocks start to, you know, stocks languished last week in the face of this yen rally. If we start to see yen, you know, sell off and we see pound yen start to rise, that is an indication that stocks could get another, you know, kind of another fire, another tailwind, and move higher. We might see the S&P 500, you know, break above 3,200, which, you know, opens it up for all-time highs. So that's what
was the upside potential you had in Guppy again in the previous chart? 160, did you say? Or are you
I said
off the weekly?
So we needed to, I said 150. Yep, I said
150. Okay.
But those are notorious, like 149. Where we're seeing 149, 148. I'm sorry, 148.
Got it.
Got it. Like that huge resistance. But yeah, I said 150 was quite a possibility. So that's what I'm seeing, and that's, if we're headed to 150, this is just, you know, one hell of a setup. So that's what I'm seeing, and if it coincides with risk appetite in equity markets, there you all go.
So if you get long here, Lydia, do you risk the low at 61.8 at 130.06 or so?
1/3. I could make it tighter than that. You know, tighter than that, like last week's lows. You know, or the support level 130, 155. Yeah, you could keep it really tight. At this point, it's 100 pips away. But if it falls and you get in on a fall into the support, yeah, you could keep it tight. You could really control risk that way.
Thank you.
All right, so we'll move to the dollar. So dollar was, we got a lot of dollar strength last week, and it went right into support. But again, this is the 61.8. We got a break technically, really a breach. A break, we kind of want to see it stay underneath the level and continue with some follow through. And writing this down, taking it into support, watching how the week opened, noticing that we're at the 61.8 level. And again, kind of with the themes of risk appetite, what I was seeing in the yen, this looked like another long setup here. So let's dial out. This is a 4-hour. I'll just kind of zoom out, step it out. Okay, so this is really just a second wave higher. We had a long correction into the fib. And same thing that we kind of saw with the yen, we have this larger 618 breaking. So to me, dollar weakness is just going to be a tug of war with dollar weakness and dollar strength. I think we'll see a lot of weakness. We'll see a lot of strength. I think overall, we're going to get this meltdown in the dollar, which will see the pound dollar melt up, and it's going to melt up against the pound, and in particular, just because there's so much pound weakness, right? So it's just going to take more for the pound just to rally, particularly. So against the dollar, we can't see any kind of dollar weakness. I think we're just going to probe higher and higher highs. So again, I think it's going to be a tug of war. I don't think it's going to rip, but I think this is a setup off the 61.8, which can take us finally take us above resistance at 127.75, which just opens us up to 130. So I think in April, I was looking for 130, but was aware that we're hitting resistance. And that's when we were making this kind of double top into 126.34. We made this correction. Now we've hit the next resistance at 127.75. We've corrected again, what I think could be another long opportunity in the pound dollar that takes us into 130. So that's just what I'm seeing. We'll see. Again, the dollar is more of a tug of war just because it has the reserve currency status that makes it in demand internationally as a reserve currency. But the Fed has been leading the way in easing in unprecedented ways. So that's just going to weaken the dollar fundamentally. So that's my look at the pound for the week ahead.
Okay.
Then the euro pound, one of my faves too. So the euro pound, I think is going to see a melt up as well. Euro pound might actually start to be more of a trend because of the pound weakness. As we rally, we get more pound weakness. And so I think that this break above 90. So if you guys could see my green lines with the euro pound, I'm going to zoom in. So we were range bound for about 4 weeks between 90 and 88.50. We got last week we got a breakout of the range, and a breakout of the range for me will usually see a retest of the range level, and then a breakout that moves higher. So I leave the fib on here just to see where we see sellers
to see where I was saying I was going to buy it at that level, right?
Well, I was going to say where sellers might be able to step in. So it's still,
Okay.
I still agree with you. We're going higher. I like the breakout of the range to the upside. That just gives me a little bit more conviction. And I think you can buy going into 90. If we fall back into the range on the daily chart, which is a quicker signal, even the 4-hour. But if we fall back into the range against the green lines, then we'll probably likely test 88.50 again, or look to go below 89. But Dale,
what do you think longer term? Do you think we could go for that March high up there at 96 and maybe even trade parity?
I think just because I don't see not even the coronavirus has soften the stance the UK is taking with the EU. And so, yes, I think that we can actually revisit those highs as we move closer to December 31st, which is kind of the ultimate deadline, deal or no deal. So I think it's a possibility that if the UK continues a hard stance and not willing, an unwillingness to be flexible, that yes, I do think that we can revisit those March highs as, I think it's quite a possibility. But I favor this to the upside too. So Dale and I are in alignment on the euro pound. It's been a couple of years.
Now I'm nervous.
And then with the condols, then you'll see really these one like pound kiwi haven't been it's in a train. It's not a train. I don't I trade on corrections. I enter in on corrections, and so this has just been one that I haven't been able to catch. I haven't really been able to catch since 2. I think I took it 1 week as a weekly. I took it 1 week to the downside. From here. And then I haven't been able to catch it since because it just hasn't given any kind of correction.
Consolidations. It's just a straight line move.
It's just seriously a straight line. It's literally been, looked like 4 weeks to the downside. And this is, we open up no different. Breaking support. This break of support should take us into the next level of support, which we have the 200 moving average on the weekly chart. So let's see if,
Where would you sell a rally here? If we
Oh,
got one, even
got
if we
one.
move lower first, what would
I
be a
think
good level?
a rally probably takes us into 194. I think the
Yeah.
underside of all this support
Okay.
probably be the best rally. It's not, if we went really in using a fib, I'd probably put a fib on an hourly chart, just
Okay.
because these moves have been just so, like you said, a straight line that
Yeah.
you see these little corrections have only been lasting about 4 hours, and then we're down to the downside again. So you'll see the same thing with the Australian dollar, because again, as a proxy, a Chinese proxy, and we're seeing strength there. So yeah, we're just, again, those two currencies in particular have just been pushing the pound, again, pound weakness, right? So we're just
Yes.
seeing a lot of moves to the downside. On a larger scale, we're in the fibs when it comes to the pound Aussie. So maybe we'll get support into 175, which, we've seen a bounce before. We've seen false breaks and then moves to the upside. So, but that's 500 pips away, and I think that we can get there now that we've broken below 182.
Okay.
Yeah, and then the pound CAD. This is a little different just because of the oil story, and the Canadian economy is still not as opened up as compared to China or New Zealand. So, but again, with the oil's getting a little bit of a bottom right now, short term, we've seen the Canadian dollar also strengthen, particularly last week. So now we're getting a bounce. So Canadian dollar, I just haven't seen a clear in the weed. When you're in the weeds, this move to the downside seems obvious, but it wasn't. It wasn't obvious, and it wasn't one that I was looking on, to be honest with everybody. During this time with more volatility, I have been concentrating my view on the dollar, the euro, and the Kiwi, and the guppy. So I've just really consolidated from the 6 to the 4, but still,
It only takes one, Lydia. You don't have to be right every cross, every instrument. If you really have conviction on one, you could just stay with the date that brought you to the dance.
You're right. And I've been doing really well with even an even more narrow view in these past 2 months. So yeah, I agree with you. Just to be fully transparent, some of these pairs I just haven't really paid attention to the pound CAD in the last 2 weeks, just to be fair. But yeah.
Okay. You want to field one question from?
Sure.
An attendee, Paul, is asking, hi, Lydia, love your analysis as always. Please project us into early 2021, post-Brexit transition period and a potential deal or no deal, post-U.S. election, and post, hopefully, any second wave of COVID. Where do you see cable versus USD? Euro, is there any chance we can get back to 140? And back to 125, 130 in the euro.
Okay, so
well, they're really asking you to be like
a crystal
futurist.
ball.
Yeah.
So
you may not even think that far ahead, do you?
I haven't. I've been thinking just into Paul, as far as I've gone is into Labor Day. I'm just, trying to see where we get, how countries are getting through the summer. But if I do
it's not your thing to be a predictor of long-term.
No, it's not a predictor. If I just look at the charts, if I just look at the charts, we're headed to 130, the dollar, and the dollar weakens more from here. Like that would be my overall picture. I wouldn't be surprised to see us weaken as high as $1.3350. I think the dollar weakens, but that's just on a fundamental view. I don't think it's going to be a clear cut, and I think it'll depend on the currency. So I can't say where we'll be because of around the election with that much change. We might see the dollar really strengthen just because of uncertainty. It's hard to tell. It's hard to say how the market reacts with pound and Brexit. We could see the UK soften. Maybe they don't have as strong of an economy now, and they concede to what the EU would like out of this withdrawal agreement, and we see the market rally the pound in a situation like that, just because they haven't. It's such an opposite reaction to what we've seen so far and how the market react to it. So there's a lot of things that could happen going into 2021. And so I would say, just because of the environment that we're in, you don't even need to project that far ahead. You should take it month by month, season by season, because we're in a totally different season right now than we will be when we enter the fall. And, you know, people are back at the trading desk. People just, and, you know, just, I don't know if the people went on vacation. It's a little different this year. Maybe we'll have a lot of liquidity this summer because everybody's just still at home and still in the markets anyway. And
so my short answer for a question like that is, I don't know.
I don't know.
Yeah, IDK.
I don't know.
I don't know. And you know what? It's better to, it's wisdom to say you don't know instead of trying to figure out what
no, you just fundamentally, I'm just looking at charts, and, you know, I like the dollar week from here and how we get there.
I'm kind of thinking from your guppy call that I know you're an RIA, constructive equities going forward.
Oh yeah, yeah, and that
Fed bought us a
changed,
few
you know,
years. What do you think? The Fed actions bought us another couple years of a bull market.
Yeah, I mean, for anyone who, it's just sorry. And I've just been telling people, you just, like, if you've never seen it in action before, you're seeing it right now. Don't fight the Fed. Like, for whatever you think about the economy, just know that the market went through all of that in March price action. So the market is already in 2021 in stocks, in my opinion. And they're not, I think a second wave, however it's reported, is probably what makes us revisit lows. I don't know that we'll break to new lows, even in a second wave scenario. I think the market is really like, we're gonna figure it out, whatever that solution is, whatever the new consumer behaviors are. And thank you, Federal Reserve, and other central banks too. And we're just, this thing is, the stuff, equities, I'm very constructive on equities. And I think, I think a new dip or a new fall in prices is likely an opportunity. Big keys, I'll keep it very broad.
Yeah, maybe we could correct this recent correction from the March lows.
Yeah,
and pull back.
That's what I would see. Let's see, just pull it up when we're talking about it. Oh, take us to a weekly. So our
I like that moving average would be a nice entry. Your blue line there.
I think you're absolutely right.
about.
So a correction could see us testing lows because, you know, technically on this bigger view, this is a monthly fib. This could be a failed high, which could see us, you know, take us to this low back into the fib. I doubt it. I think if we got new lows, it would be something like this. It'd be very volatile, quick. It touch support and go back. Again, I said this for a long time, right, Dale? Like, I don't see these central banks allowing stock markets to crash again. So,
So they've been pretty successful. So
they've been pretty successful so far.
Yeah,
Remember, 2 weeks ago, people were like, people expected a U-shaped recovery, an L-shaped recovery, and we actually got a V. I mean, it's astonishing. It really, really is. And here we are. So we trade the market we get, not the one we want or think is happening. Yeah.
V for virus.
No, Dale. V for victory.
Wrong. Lydia, you want to show people where they could follow you, get in touch with you now?
Absolutely. So you can always follow me on Twitter. I should have had the blog set up. You can follow me on Twitter. I'm posting more often now, I'm happy to say. So I have more of my analysis going up now. If you want to receive this to your inbox 2-3 times when they're posted, you can sign up here to get the analysis or the charts straight to your inbox, and it's easier to find. And follow me on Twitter at FaithMight, without the FX, so at FaithMight. And you follow me on Instagram. I'm trying to get more visual with my market analysis, but still figuring that out. Yeah, and if
Well,
you would like to invest with me or learn with me and learn how to find these resistance or these levels on the charts yourself, you can check out my course under Learn with Lydia. It's the Charts 101 course. If you're interested in investing with me, you can check me out at Bay Street Capital Holdings, and that's under Invest with Lydia. So thank you so much, Dale, and thank you all for sticking around.
Yeah, thanks, Lydia, so much. And with summer beginning, I hope you have a great summer trading season and that pips just rain down on you.
Thank you so much,
all summer long, my friend. And thank you for stepping up and coming in and edifying our community once again, Lydia.
Thanks for having me.
Love you.
Have a great day, everyone.
All right. Everyone, so that's a wrap. We'll see everyone for Turnaround Tuesday. Don't just count your pips, count your blessings. And let's all have a great summer together. You're very welcome. And thanks again, Lydia, my trading warrior sister. Adios.
Thanks. Bye, everyone.
Bye-bye.